Hello and welcome to another FAQ video. Here at OFP we are taking some of the most common FAQs from our Discord chat and our support email and taking the time to go into them in more detail and the answers. Hoping that you'll be able to come away from these videos a little bit more enlightened and with fewer questions and more answers. So the aim of this video is to help explain some of the strategies that are not permitted here at OFP. And these are trading strategies that are often found to have been used by OFP by its traders. I'm going to explain some of the reasons that the strategies are not permitted and also the potential consequences that will be applied to traders who are found or who are believed to have used certain trading strategies. Traders often come to the end of a month seeing their payouts lower than they expected or seeing that their account has been banned or suspended without necessarily understanding why, and therefore, quite rightly, they will go to either the Discord chat or the support email seeking to get a better understanding of the reasoning. So what we're aiming to do here today is to remedy the problems that traders sometimes face and give you all a slightly better explanation of the trading strategies allowed here. So the main strategies or actions that are not permitted here at OFP and that will be covered in this video are arbitrage, opposite account trading, hedging, expert advisors, tick trading, and news straddling. So the next strategy or action that is not permitted is the use of expert advisors, often abbreviated to EAs. So EAs are algorithmic pre-programmed systems that are instructed on when to buy and sell certain limits, take actions without you necessarily having to be there. So due to this nature, they do not constitute what OFP counts as real trading. As they don't really show proper risk management. And that's something that OFP is really trying to instill within its traders, that you should take an approach that is replicable by yourself, regardless of when you enter a market. So they also have been known to conduct trades that are high tick, which often means within a 60-second period, which is also not permitted. So this is potentially within a gap, within any certain period where they're trying to exploit anything within a market. So they might purchase and sell, or sell and then repurchase stock within 60 seconds, as this is something they've been instructed to do, and that will automatically be flagged up as it's not permitted under the sub-minute trading rule here at OFP. So of course, some people might be tempted to use an EA, and so I'll now explain what will happen if you are found to have been using an expert advisor. So if OFP finds that you have used an EA, then your account will be suspended effective immediately. There will be no discussion. It's simply that account is suspended. You will not be receiving any payouts from that account, and you can no longer trade on that account. However, it should be noted that you are welcome to purchase another account from OFP and trade without using an expert advisor. So again, this is something we do in order to encourage people still to trade and do what OFP encourages. So this is financial independence, but do so in a way which shows accurate and proper risk management, which is one of the core things we encourage here at OFP. One of the widely used trading strategies that is also not permissible here at OFP is that of arbitrage. So arbitrage is not allowed by any means in OFP trading, be it latency arbitrage, reverse arbitrage, or long-short arbitrage. In Forex, arbitrage is the exploitation of any given advantage. So it could be something simply you have access to a pricing difference, it could be a difference in latency that is exploited in order to access risk-free profits whilst trading. Now, of course, someone may ask why OFP wouldn't allow arbitrage if you are able to access risk-free profits, no matter what. The main reasons are multiple. So in reality, there can be potential barriers, for example, slippage, that make arbitrage less rewarding. So I should remind everyone that OFP offers demo accounts. So demo accounts do differ slightly from real trading accounts, just in the way that they interact with the markets in what is possible in terms of trading, in terms of things such as latency between a demo account and a real account. Because of these differences, something may be possible in a demo account, but it may not be as replicable in reality, and so we discourage these kind of actions. Secondly, and this is more from OFP's morals standpoint, arbitrage can often be done at the expense of another trader, and this is why OFP doesn't really support it. So if you take latency arbitrage, because maybe you have a better system, maybe simply because you're closer, or whatever reason, you may have better latency, so you may be able to trade and get access to price information far quicker relative to a trade than somebody else. And because of this, you may be able to exploit it and get these risk-free profits. But because, again, not everyone has access to the same type of latency as a guarantee, it's something that we wouldn't really encourage. And that's why it's not permissible at OFP. And finally, it can often involve very high frequency trades that are in breach of OFP's terms and conditions. So again, if we look at latency arbitrage, in order to benefit from something like this, of course, when it comes to latency, what this means is that you are trading on price differences in terms of what you are seeing. So this is simply tiny fractions of a second in some cases that give you a tiny little price difference which you can act on to make profit. And of course, you're not going to be able to exploit this without doing a sub-minute trade, which is something that is not permissible at OFP. So in order to prevent you from breaking that rule, and simply on a moral standpoint, OFP doesn't allow arbitrage. So opposite account trading and reverse trading are another example of strategies that are not permitted here at OFP. So similar to hedging, this is done when a trader will use two separate accounts to open two opposite trades in order to try and benefit regardless of the movement within a market. So I'd have account A and account B. I might go long on account A and short on account B, but without necessarily understanding or having any reason to believe that the price movement is going to go in either direction. I would then combine this with stop loss orders in order to try and guarantee the upside, but limit the downside. So if I wanted to go long, then and the price does start to increase, then on my short, so account B, where I've placed a short, I would have an order, which means that if the price goes up, that short is closed, so that limits the downside, and I am maximizing my upward return by already being long on the other account on the upward price movement. So again, because of a lack of proper risk management, and it's just general devious nature, the fact that you're trying to hide it whilst using two accounts as opposed to hedging, it's something that OFP doesn't allow. And if this action is found to have occurred, the trader will be banned from trading at OFP. Lastly, this does not illustrate any proper trading. But it does promote almost a gambling behavior, because with this you could enter the market at any point, regardless of the previous price movements, regardless of be it fundamental or technical analysis, which may suggest going long or going short, or maybe because of your typical risk management not entering the market. But by using this trading strategy, it just means you can enter anywhere. Doesn't really matter, and that in itself is somewhat of a gambling behavior, and that's why it's not really encouraged here at OFP. So another trading strategy that we do not permit here at OFP is hedging. So we do not consider this to be a proper risk managed method of trading. So the nature of hedging, as seen by OFP, is that a trader will take two opposite trades at the same time at the same price in order to try and make a profit regardless of the price movement, and at the same time limiting their downside. So they might purchase a stock and short the same stock at the exact same time or at a very close period in time, which means that if it moves up in price or down in price, they will make a profit, and then depending on which way it does move, they can then close the opposite trade or put something in place which will close it for them. Because of this, it is not really considered something that entails proper risk management, which is, as always, something that OFP really does try and instill within its traders. So hedging is something that OFP does not encourage, and because also in real markets there can be a problem in terms of replicability, and it doesn't really show any kind of trading skill when done in this way, it's something that we do not permit here. So the second to last prohibited trading strategy is tick trading. So many traders will often employ a technique known as high frequency trading in order to test a demo account. So as you all know, OFP offers demo accounts to its traders. These are not real accounts, even though the profits are real money. So they frequently employ programmed experts, such as EAs, which can open several trades rapidly within, let's say, a minute. But this cannot be replicated by an individual trader in real time without the assistance of these programs, often due to real-time market conditions, which might have execution latency differences and liquidity depths. And because of its lack of replicability in real markets, it's something that we do not allow here at OFP. This kind of trading is prohibited, mostly on the basis that it violates the 1 minute rule and the EA rules. But as a general sentiment, it's because of the fact that it's not replicable and it doesn't show good risk management, again because you're using an EA or some kind of programmed expert to do trades on your behalf. So another of the strategies that is not permitted is news straddling. So this is the act of taking two opposite trades or placing two opposite pending orders prior to a large news announcement that's expected throughout the day, in order to try and capitalize regardless of the price movement, be it up or down. So this type of action is not very replicable in real trading scenarios outside of demo accounts due to anything such as slippage. So it's not permitted within OFP accounts, also because this doesn't show proper risk management. This is an analysis of a chart of fundamentals, technical, that would show someone is appropriately using risk management. This is simply taking two opposite positions and not being able to say which way it's going to go, so just trying to capitalize regardless of the direction. OFP tries to encourage good regular risk management in all of its trading by all of its traders, and news straddling definitely violates this. So what is important to note, however, is that having a trade open during a news release is permitted. So if you open one at 9 AM in the morning and there's a large news release at 10 o'clock, and then you proceed to close your trade later in the day, I don't know, let's suggest 3 o'clock, then this is not considered news straddling. If, however, you were to open a trade at 9:59, placing two opposite positions, and the news release occurred at 10 o'clock, then that would be considered news straddling, as that is quite clearly targeting the news or the press release. So just to go over again what happens if you break one of the prohibited trading strategies. So if you're found to have used a strategy that is not permitted, you're likely to have your profits deducted and your account suspended. This will then often give you the chance to explain your actions. If you adequately explain your actions and can give justification as to why the trade you did appeared the way it did, then you will be reinstated, your profits are given back, and you can carry on trading. However, if you're not found to have adequately explained it, then there are two potential things that happen. You're either able to carry on trading on the same account, simply with your profits deducted, or you will see that your account is closed. Now, when it comes to closing the account, again, there are two potential avenues. If you are found to have used an expert advisor, so an EA, then whilst your account is closed, you are more than welcome to open up another account with OFP in which you do not use an expert advisor. However, if you do something such as opposite account trading or news straddling, then in this case you are permanently banned from OFP and you will no longer be allowed to trade. So that concludes the video on prohibited trading strategies. I do hope that this has been somewhat helpful in explaining the strategies that are prohibited by OFP on the day-to-day basis. If it helps a single person avoid suspension or banning because they may not have known that these are not allowed, then here at OFP we see that as an absolute success, and we are glad that we'll be able to help even a single person. The more people that watch the video, the more people that understand what's not allowed, the better, because that means that people will be able to continue trading. We will further instill the idea of proper risk management and a proper approach to trading, and that's exactly what we're here for. If you do need more explanation, then please do not hesitate to contact us either through our Discord chat or our support email. Thank you very much.